Welcome back to Risk to Reward. Today we're going to have a quick look at Shell plc, one of the largest energy companies in the world. Shell is a British multinational energy company headquartered in London, and its primary listing is on the London Stock Exchange under the ticker SHEL, SHEL. The company also trades in the United States through a secondary listing on the New York Stock Exchange. Shell operates in more than 70 countries and is involved in nearly every part of the global energy industry. Its business is typically divided into 5 segments. The first being upstream, where Shell explores and produces oil and natural gas. The second is integrated gas, which includes liquefied natural gas or LNG, one of Shell's most important and profitable businesses. The third is marketing, which includes Shell's global network of fuel stations and lubricants. Number four is chemicals and products, where the company produces petrochemicals and refined fuels across many industries. And finally, there is renewable and energy solutions, which include investments in electric vehicle charging, hydrogen, and lower carbon energy projects. Financially, Shell remains one of the most profitable companies in the global energy sector. In 2025, Shell reported around $18.5 billion in net profit, although that was roughly 22% lower than the previous year, mainly due to weak oil and gas prices compared with the energy spikes seen in earlier years. Despite the decline in profit, the company still generated strong cash flow. Shell reported around $42 billion in operating cash flow, which allows the company to return significant amounts of capital to shareholders. For example, Shell currently pays a quarterly dividend of about 37 cents per share and continues to run multi-billion-dollar share buyback programs as part of its strategy to return 40 to 50% of operating cash flows back to investors. One of the biggest reasons Shell continues to perform relatively well is its leadership in the global LNG market. Shell is one of the most largest traders of liquefied natural gas, and the company expects global LNG demand to grow about 4 to 5% per year through to 2030, which is driven by energy demand in Asia and Europe. Shell has also invested heavily in deep water oil projects in regions such as Brazil and the Gulf of Mexico, which tend to have higher margins and long production lifespans. Another positive factor is Shell's focus on cost discipline. Since 2022, the company has implemented more than $5 billion in structural cost reductions, helping maintain profitability even when energy prices fluctuate. However, there are also important risks. Like most energy companies, Shell's profits depend heavily on global oil and gas prices, which can significantly change depending on economic conditions and geopolitical events, as we can see in the current news. The company also faces increasing pressure from governments and investors to reduce emissions and accelerate the transition to cleaner energy. Shell has reported total emissions of roughly just over 1 billion tons of CO2 equivalent, highlighting the scale of environmental challenges facing large oil and gas companies. At the same time, Shell is investing billions into renewable energy, electric vehicle charging networks, hydrogen projects, and biofuels as part of its long-term energy transition. Overall, Shell remains one of the most diversified energy companies in the world. Its strengths include global scale, strong LNG trading operations, and massive cash flow generation. But its long-term success will depend on how effectively it balances profitability from traditional fossil fuels while transitioning towards that cleaner energy. And that's where the real investment question lies. If you guys enjoyed this breakdown, make sure to subscribe to Risk to Reward for more company analysis and investment insights. Thank you.